All right, get ready, because today we're taking a deep dive into Indian insurance. Specifically, the latest quarterly results from LIC, the Life Insurance Corporation of India.
Oh, yeah, LAC.
Huge player in the market. And their Q2 FY25 numbers just came out. We've got the official press release. It's got all the highlights.
Right.
But we're not stopping there. We're going deep into the nitty-gritty of their financial statements to uncover what's really going on.
I like it.
I know what you're thinking. Financial statements, they can be a bit like trying to read hieroglyphics.
Right.
But don't worry, we're here to decode it all for you. Plus, I've got a feeling we might unearth some surprises along the way. So let's get started.
Sound good.
The first thing you always want to know is, did they make money?
Well, LIC reported a profit of Rs 18,082 crore for the half year. That's a 3.51% increase compared to last year.
Okay.
Now, on the surface, that sounds pretty good, right?
Yeah.
But the real question is, how does that compare to what analysts were expecting? Unfortunately, that information isn't in our sources, so we'll have to keep that as a little mystery for now.
Okay, a little cliffhanger to keep things interesting. But one thing that definitely caught my eye in the press release was their market share. It's now at a massive 61.07%. Wow.
That's huge.
To put that in perspective, imagine you walk into a room and over half the people are LIC customers. That's the kind of dominance we're talking about. What's driving that kind of growth?
It's a combination of factors.
Yeah.
LIC has a really strong hold on what's called group business.
Okay.
Think large-scale insurance plans for companies or organizations. They hold almost 75% of that market.
Wow.
But they're not just relying on that. Their individual business segment also grew, which is a good sign.
Okay.
And there's a notable shift happening towards non-par products,
Yeah.
which we'll definitely dig into later.
Okay, hold that thought. Now, are you ready for the really juicy stuff? Let's crack open those financial statements. Don't worry, we'll guide you through all the numbers. First up, let's look at the benefits paid out. Think of this as the money flowing directly back to policyholders. And get this, it's a whopping Rs, 179,426.64 crore. To put that in perspective, that's more than the entire GDP of some countries.
Wow, that's a massive number.
Yeah.
It really highlights the scale of LIC's operations and the impact they have on people's lives.
Yeah.
It's a good reminder that these numbers aren't just abstract figures. They represent real financial security for millions of individuals and families.
Exactly. Now let's tackle a term that might sound a bit intimidating: actuarial liability. The financial statements show a change in this liability of over Rs, 211,397.73 crore.
Okay.
Can you break that down for us in plain English? What does it actually mean?
Imagine LIC as a giant piggy bank.
Okay.
Actuarial liability is basically the estimated amount of money that LIC needs to have in that piggy bank to cover all its future obligations to policyholders.
Yours?
It's like carefully calculating how much money they'll need to pay out on claims, maturity benefits,
Yeah.
and everything else they've promised their customers down the line.
Okay.
A significant change in this number, like we're seeing here, could mean they're expecting to pay out more in the future.
Okay, so it's like LIC making sure they have enough money in the vault to keep all those promises they made to policyholders. That makes sense. But there's another thing I noticed in the statements that I found interesting. They mention transfers from shareholders' account quite a few times. Why would LIC need to take money from shareholders?
That's a sharp observation. It seems LIC is being proactive about managing potential future costs.
Okay.
They've set aside funds for things like potential increases in family pensions and other pension liabilities. It's like they're adding extra padding to that piggy bank, just in case.
Oh, eh?
And they're doing it by tapping into shareholder funds.
So they're not just sitting on their laurels, they're actively planning for the future and making sure they can meet their obligations, even if things change. Now, before we get too lost in the world of financial statements, remember that huge jump in non-par product growth we saw in the press release? 203.37% is a massive leap.
Yeah.
Can you help us understand what non-par products are and why this shift is so important?
Sure. Think of it this way. Imagine you had a bake sale. You can choose a slice of cake from 2 different tables.
Okay.
At the par table, the size of your slice might get bigger depending on how many cakes they sell.
Okay.
But at the non-par table, you get a fixed slice no matter what.
Ah, I see.
That's the basic difference between participating par and non-participating non-par insurance products.
So with par products, you're essentially sharing in the company's profits, while non-par products offer a guaranteed fixed return.
Exactly. With par products, you're essentially a partner. sharing in the company's profits, while non-par products offer a guaranteed fixed return. It's a trade-off between potential upside and guaranteed stability. And LIC's increasing focus on non-par products might signal a strategic shift towards more predictable profitability.
Interesting. So it's like LIC is deciding to bake more of those fixed slice cakes. But does that mean customers are getting a smaller piece overall? I mean, are they losing out on potential profits?
That's a great question, and it's one that analysts and customers are likely watching closely. The popularity of non-par products could be driven by several things.
Mm-hmm.
Maybe people are looking for more certainty and stability in the returns, especially in uncertain economic times.
Mm-hmm.
Or perhaps LIC is finding it more challenging to deliver high profits on their participating policies in the current market.
Makes sense. It's all about weighing risk and reward, right?
Yeah.
Speaking of risk and reward, let's not forget that behind all these numbers are real people making real decisions about their financial futures. The press release mentioned that LIC sold over 9.1 million individual policies this quarter.
Oh,
That's a lot of people putting their trust in LIC.
absolutely. It speaks volumes about LIC's brand recognition and the trust they've built, especially in rural areas where they have a deep-rooted presence. But it also raises a crucial question. Are those policies staying active?
Right.
We call this persistency in the insurance world.
Okay.
It's one thing to sell a policy, but it's another to keep those policies in force.
That's a really important point. If people aren't keeping up with their premiums, it can impact LIC's long-term stability and its ability to meet those future obligations we were talking about earlier. So what did the numbers say about persistency? Well, the press release gives us some clues. It mentions persistency ratios. Essentially, out of 100 people who buy a policy, how many are still paying their premiums after a certain period? LIC's 13th month persistency ratio is 77.62%, meaning roughly 78 out of 100 people are sticking with their policies after a year.
Which on the surface sounds pretty decent, but there's a slight catch.
Uh-oh.
If we compare this to last year's 13th month persistency,
Mm-hmm.
which was 78.49%, there's a small but noticeable dip.
A dip is a dip, even if it's small. What could be causing that?
Several factors could be at play here. Competition in the insurance market is heating up,
Right.
and other players might be offering more attractive products or features that are pulling customers away from LIC.
Okay.
Economic conditions, like inflation or a slowdown, could also be impacting people's ability to keep up with their premium payments.
It's like a puzzle with multiple pieces. And there's one more piece we haven't looked at yet. The perspective of the man at the helm, LIC's CEO, Siddhartha Mohanty. The press release includes a quote from him, where he talks about holistic growth, a changing product mix,
Yeah.
and enhancing market share without compromising profitability.
Classic CEO speak,
Yeah.
right? But if we decode those buzzwords a bit, there's a clear message here.
Okay.
He's acknowledging that LIC is operating in a dynamic landscape.
Yeah.
And needs to adapt to stay ahead of the curve.
Makes sense.
The emphasis on holistic growth suggests they're not just chasing profits, but also focused on things like customer satisfaction,
Right.
social impact, and sustainable practices.
So they're trying to strike a balance between growth and responsibility, which is a pretty tough act to pull off.
Yeah.
But it sounds like they're aware of the challenges and are actively working to address them.
Exactly. And that brings us to the million-dollar question.
Yeah.
What does all of this tell us about the future of the Indian insurance market?
Right.
We're seeing a market leader like LIC adapt its strategies, embrace new product types, and grapple with shifting customer dynamics. It's a microcosm of the larger trends shaping the industry as a whole.
Absolutely. It's like watching a giant ship navigate through choppy waters. But the journey isn't over yet. There's one more interesting detail I want to highlight. Deep in those financial statements, there's a breakdown of persistency ratios by policy type. And guess what? It reveals some fascinating variations.
Ooh, that is interesting. Tell me more.
Well, for example, pension participating policies have a remarkably high persistency rate, over 93% after 13 months.
Wow, that's significantly higher than the average. Makes sense though, right?
Yeah.
Pensions are often a cornerstone of retirement planning, so people are less likely to let those policies lapse.
Exactly. But on the flip side, there are some policy types with much lower persistency. Linked health non-participating policies, for instance, have a 13th month persistency of just 86.6%. That's a pretty big difference.
This highlights an important point about product suitability and evolving customer needs. Health insurance, especially the linked variety, which combines insurance with investment elements, can be more complex. and might be more susceptible to fluctuations as people reassess their coverage needs or seek out more cost-effective options.
Right. It's a reminder that insurance isn't a one-size-fits-all solution. People's lives change, their needs change, and the insurance industry needs to adapt to that.
Yeah, it's like trying to hit a moving target, and that makes LIC's strategic shift towards non-par products even more intriguing.
Absolutely. We discussed how this shift could impact both profitability and customer appeal. And this detailed data on persistency ratios adds a whole new layer to that analysis. It'll be fascinating to see how this plays out in the long run, both in terms of LIC's bottom line and its ability to retain policyholders across these different product categories. It's like a giant game of chess, with LIC making strategic moves to stay ahead of the competition and meet the ever-changing needs of its customers.
A very apt analogy.
Yeah.
And remember, these numbers we've been discussing are just snapshots in time. The real impact of these trends will unfold over years, not quarters.
Which means we have a lot more to explore and analyze in the future. But for now, we've reached the end of our deep dive into LIC's Q2 FY25 results. We've crunched the numbers, decoded the jargon, and hopefully given you a clearer picture of this financial giant and its place in the Indian insurance market.
Yeah, we've seen growth, strategic shifts, and a company grappling with the challenges of a dynamic market. It's a story that will continue to unfold, and we'll be here to break it all down for you.
So what can you take away from all of this? Well, for starters, knowledge is power. Use these insights to spark conversations about the Indian economy, the insurance industry, or maybe even just to impress your friends with your newfound financial savvy. And remember, we've only scratched the surface here. If you're eager to dive deeper, we've got links to all the source documents in the show notes. Go ahead, explore. And as always, thanks for joining us on this fascinating journey into the world of finance and business. Until next time, stay curious.